Welcome to Tim's Strategy of the Week series. Today we're going to look at an Ichimoku cloud trading strategy. That's a mouthful, isn't it? We'll talk about it. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of the Strategy of the Week. The Ichimoku cloud indicator is Japanese in origin, hence the Japanese names. Please forgive me for my pronunciations. If I mess them up, please feel free to correct me in the comments below. Just be kind, okay? The Ichimoku Hinko Hyo is a momentum indicator used to recognize the direction of the trend. It can also define accurate support and resistance levels. The Ichimoku cloud indicator consists of 5 main components that provide you with reliable trade signals. The Tenkan-Sen line, also called the conversion line, represents the midpoint of the last 9 candlesticks. It's calculated with this formula. The Kijun-Sen line, also called the baseline, represents the midpoint of the last 26 candlesticks. It's calculated with this formula. The Chiou span, also called the lagging span, lags behind the price, as the name suggests. The lagging span is plotted 26 periods back. The Senku span A, also called the leading span A, represents one of the 2 cloud boundaries, and it's the midpoint between the conversion line and the baseline. Here's the formula. This value is plotted 26 periods into the future, and it's the faster cloud boundary. And the Senku span B, or the leading span B, represents the second cloud boundary, and it's the midpoint of the last 52 price bars. Here's the formula for this one. This value is plotted 52 periods into the future, and it's the slower cloud boundary. From here on out, I will not be referring to these lines with their Japanese names because I'm sure that I massacred them. Plus, the Yank in me just finds them really difficult to remember. While the Ichimoku cloud indicator involves 5 different lines, reading the graph is actually very easy. Using the trend lines mentioned above, you first need to determine whether the leading span A or leading span B is currently higher. These 2 are simple to remember because they are the lines that enclose the cloud. Once you've identified which line is on top, the cloud component of this graph can be shaded in. It's actually pretty simple. If the leading span A in green here is above leading span B in red, price is in an uptrend and the cloud will be green. If B is above A, then price is in a downtrend and the cloud will be red. The width of the cloud, or the distance between leading spans A and B, represents the volatility of the price. As you've heard me say lots of times, volatility is simply the relative size of the candles and candle bodies. Here are some basic interpretations of the Ichimoku indicator. When the price is above the cloud, we're in a bullish trend. When the price is below the cloud, we're in a bearish trend. When the price is in the middle of the cloud, the trend is consolidating or ranging. In addition, the Ichimoku charting technique provides bullish and bearish signals of various strengths. When the conversion line crosses the baseline from below, it is considered a bullish signal. When the conversion line crosses the baseline from above, it is considered a bearish signal. The strength of the Ichimoku trading signals can be determined by 3 factors. Number 1, how far away is the price movement from the cloud? Number 2, how far away is the lagging span relative to the cloud? And number 3, how far away is the conversion line baseline crossover relative to the cloud? Because many of the lines on the Ichimoku cloud chart are created using averages, the chart is often compared to a simple moving average chart. However, Ichimoku is more dynamic than a simple moving average chart as it's designed to help detect changes in support and resistance. The relationship between leading span A and leading span B will indicate whether there is a strong downtrend or uptrend. Pay attention to both the color and the size of the cloud. When the cloud between these lines is small, then the trend will not be very strong. The Ichimoku cloud is useful for day traders and others who need to make quick decisions. The cloud is often paired with other technical indicators such as the relative strength index in order for traders to get a complete picture of resistance and support. Many traders will also watch for crossovers in order to determine when trends have reversed. Ichimoku cloud trading requires a lot of self-discipline. This is because you have to wait for the best trade signals. Our strategy will use the default settings of the Ichimoku cloud system. For the purpose of our strategy, we're going to delete the lagging span line from our charts because we won't be using it. The Ichimoku cloud system is designed to keep traders on the right side of the market. Our trading rules will help you follow the trend for as long as possible, at least until it's clear that a reversal is occurring. The Ichimoku system suits swing trading best. This is because it maximizes profits while minimizing risk. The best time frame to use for the Ichimoku is the one that fits you best. Remember, trading is a personal thing. As I like to say, you do you, boo. This swing trading strategy will teach you how to ride the trend right from the beginning. You'll also be able to capture as much profit as possible. Step 1. Wait for the price to break and close above the Ichimoku cloud. Ichimoku cloud trading requires the price to trade above the cloud. This is because it's a bullish signal and potentially the beginning of a new trend. The cloud is built to highlight support and resistance levels. It highlights several layers deep because the support and resistance is, of course, not a single line drawn in the sand, it's several layers deep. Remember, a line is never just a line, it's always a zone. So when we break above or below the Ichimoku cloud, it signals a deep shift in the market sentiment. A high probability trade setup requires more layers of confluence before pulling the trigger. And this brings us to step 2. Wait for the crossover. The conversion line needs to break above the baseline. The price breakout above the cloud needs to be followed by the crossover of the conversion line above the baseline. Once these two conditions are fulfilled, we can look to enter a trade. The Ichimoku cloud indicator is a very complex technical indicator. But now we're going to lay down a very simple entry technique. You want to buy after the crossover at the opening of the next candle. Ideally, any long trades using the Ichimoku strategy are taken when the price is trading above the cloud. We added an extra factor of confluence in this rule set before pulling the trigger on a trade. So after the crossover, we buy at the opening of the next candle. Step 4. Place your protective stop loss below the breakout candle. The ideal location to place our protective stop loss is below the low of the breakout candle. This trading technique accomplishes two major things. First, it significantly lowers the risk of losing big money. Second, it helps us trade with the market order flow. Since this is a swing trading strategy, we're looking to capture as much as possible from the presumably new trend. We'll be looking to trail our stop loss below the cloud or exit the position once a new crossover happens in the opposite direction. And lastly, step 5, take profit when the conversion line crosses below the baseline. We only need one simple condition to be satisfied with our take profit strategy. When the conversion line crosses below the baseline, we want to take profits and exit our trade. If you want, you can wait until the price breaks below the cloud, but this means risking losing some of your profits. Sometimes, though, in order to gain more, you need to be willing to lose some. And obviously, you can use the same rules for a sell trade, just do them in the opposite direction. Here's a sell trade example. The Ichimoku cloud trading strategy may be somewhat different than what you're used to in technical analysis. If you're having a tough time finding true support and resistance, try applying these Ichimoku cloud trading techniques. The Ichimoku cloud system works well on any market in any time frame. You can easily capture 80% of the trend if you follow the rules. And that's what it's all about, following the rules, right? That's it for this week's strategy. Be sure to come back next Wednesday as we discuss trading strategies over the next few weeks in our trading education series. Don't miss my trading picks of the week on Mondays and my strategy of the week on Friday right here at Trading Strategy Guide's YouTube channel at 3 p.m. New York time. Be sure to subscribe and hit the bell so you'll be notified when these videos come out. Have a great weekend, and I'll see you with a couple of trade picks on Monday.